Well, we just told you before going into the break that there are lots of interesting stocks to watch out for today. Earnings season is really kicking in, and we've got our team standing by to take you through the top 10 stocks that must be on your radar early this morning. Guys, great to have all of you on. Sudarshan, you kick it off. Obviously, we all want to know Bajaj Auto. The stock was showing some pressure, towards the end of trade yesterday. What's the earnings fine print saying?
So Bajaj Auto has reported earnings for Q2 FY25 and those earnings were largely in line. But what has surprised market is management's commentary about the festive demand. But first talking about the numbers, both year-on-year and sequentially, earnings have improved or seen a healthy growth. Revenue was up 22%, EBITDA has increased 24%, margin has expanded 40 bps to 20.2%, and this margin remains over 20% for fourth straight quarter. Now coming to the commentary. In the conference call, company has talked about festive demand. It says first half of the festive season has seen growth that was slightly below expectation, and that growth was in the range of 1 to 2% versus company's expectations of 5 to 6%. Brokerage though have been factoring in growth for two-wheelers for festive season in the range of 8 to 10%. So it's much below expectations of brokerages. And brokerages have mixed views on the stock post Q2 earnings. Citi maintains sell call with a target of rupees 7,800 per share. CLSA has an underperform call and target is rupees 9,493. Jefferies and MS though remain positive. Jefferies has a buy call with target of rupees 13,400 and MS has an overhead call and target is rupees 11,389 per share.
Okay, all right, Sudarshan, thanks a lot for that. Well, and remember at 9:30 a.m., the management of Bajaj Auto will be joining in to detail their past quarter's numbers and the way ahead as well. But let's hop across to Rima. She's here to tell us about LTTS, which the numbers are quite disappointing. But Rima, also tell us about Mphasis. Yesterday, there were some shots that got created on that stock, maybe in for a bit of a bounce. Tell us more about both of them.
So let me start with LTTS, where the revenues are largely in line. Margins are slightly lower, that's a miss there, but the company holds on to its FY25 guidance. So on the top line, the company's delivered a dollar revenue growth of 4%. Basically, this quarter, we've seen the revenues bounce back. In the prior quarter, there was a revenue drop of about 3%, and this quarter, we've seen that recouping. Margins, though, the street is anticipating a margin expansion, but margins continue to come under pressure. The company says they're investing. Margins this quarter are down 50 basis points. And look at the way the margins have corrected over the last 3 quarters. From 17.2%, we're now down to 15.1%, and the wage hike impact is still to kick in. That said, the management is still upbeat about the full year. So they're holding on to their 8 to 10% revenue guidance and their margin guidance of 16%. But, to meet that revenue guidance, the company needs to do 4.5 to 7% in Q3 and Q4. So is that a bit aggressive? That remains to be seen. Now, Mphasis is where the numbers are looking good. The company's top line growth has come in at 2.4% quarter on quarter, ahead of street expectations. Margins have expanded by 40 basis points. Profits are up 4.5%. Growth is led by the telecom, media vertical, TMT as we call it. That grew 5.5%. But the BFS vertical too, on expected lines, has bounced back. So the BFS growth has come in at 3.2%. And the company is also talking about how the BFS pipeline has expanded. But you know what, guys, this might just be a sideshow. Today, we've got numbers from Infi, Wipro, LTI, Mindtree. So 3 large cap Nifty IT stocks will be reporting numbers, but it will be post-market hours, so we'll track them very closely to get a clearer picture of the industry outlook.
Rima, we got the hint. That's Rima telling us, not so subtly, that to leave her alone today. Don't come talk to me.
Don't mess with Rima today.
All right, thanks very much, Rima, for that. Well, we have the L&T Tech Services Management joining us. Amit Chadda of L&T Technology Services at 9:40, so it's coming up to decode their second quarter numbers. But let's move on. CRISIL is the next one we want to talk about. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. It's a good set coming in from CRISIL. Revenue seeing an uptick of almost 10%. The margins too have improved by 150 basis points to 27.6%. The net profit is also seeing a sharp surge of 13% on a YOY basis. This good performance is largely being driven by their rating services segment. Revenue out here saw an uptick of almost 30% YOY. The operating margins too are seeing a substantial improvement of nearly 466 basis points to 48.2%. On the other hand, their other segment, which is research, analytics and solutions, the growth was quite muted out here, with revenue growing by only 4%, and the operating margin actually declined for this segment, coming in down by almost 200 basis points to 18.3%. But overall, the revenue for the company has come in much higher than what the street was expecting. Net profit too coming in above estimates, going with the green for this counter.
Got it. All right, let's hop across to Sonal. Sonal, tell us about Kolte Patil.
Well, good operational update from the company. It's a YY and a quarter-on-quarter uptick that the company has seen. Volumes are up 5% YY at 1.03 million square feet. If we talk about the sales value, that's up 22% on a YY basis, 8% sequentially. Collections are up 16% on a YY basis, but there's a decline on a quarter-on-quarter basis by around 10%. For the first half, the company has seen a volume growth of around 4% to come at 2 million square feet. Sales value is up 11% at around 1,500 crore rupees, and the company says that they are on track to achieve that sales guidance of 3,500 crore rupees in this year that they had given earlier, going with green on Kolte Patil today.
Okay, all right, got that. Let's also get in Vivek. He is tracking GMR Airports. Vivek, morning. I think we've got the numbers in, right? Passenger traffic. How do they look?
Well, good morning. That's right. So GMR Airports, has gone ahead and given the operational update for the month of September. On a year-on-year basis, the numbers quite strong. Passenger traffic at 1.02 crore pax handled. This is up 9% on a year-on-year basis. But on a month-on-month basis, there appears to be some, softness both in terms of passenger handle as well as the aircraft handle. So on a month-on-month basis, passenger traffic is down 4%. Domestic passenger traffic up 7.5% year-on-year. International passenger traffic stronger but off a low base at 12.2% year-on-year basis. Aircraft movements is up again 8% on a year-on-year basis, and like we mentioned, down almost 4% on a month-on-month basis. Expect some green, but it will be moderated by the fact that month-on-month there is a little bit of softness seen.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm looking at NALCO from the metals pack, and that's because of a couple of reasons. One is we've got some comments coming in from the Chinese housing minister, so that should flash for you on the screen. And the other factor is that Alcoa came out with its set of numbers, and post-market hours, that was up close to around 6%. That correlation between Alcoa and the Indian stocks actually, it had diminished in the last few quarters. But this time around, I think it's important. I'm telling you why. Because the numbers that came in from Alcoa was the best we've seen in multiple years. The EPS estimates was much better than what they spoke about. And the most important part was the beat was led by lower cost as well as stronger alumina prices. They are talking about alumina market staying in deficit for the next 6 to around 9 months. And that's why Q4 will be even better. This is the positive read-through for NALCO. Remember, last week itself, we had the NALCO management speaking to a CNBC-TV18 exclusively. He said that he's expecting alumina prices to hold at $600 per ton, and he's also expecting a deficit of around 1 million tons. It's a direct beneficiary, gets considerable amount of its profitability from there. So that's why NALCO will be the stock that we'll be looking at. But let's wind this down with Vinny on some other stocks in the news. Vinny?
Good morning. Yes, so keeping an eye out on 4 stocks. First is Bikaji Foods. Now, they've acquired 53% stake in the Hazelnut factory, which is a QSR company. They manufacture sweet products as well, so bakery, sweet products. And Bikaji has spoken about increasing their focus and emerging focus on QSR. This is the second acquisition we've seen in the last couple of months coming in from the QSR side for Bikaji. Valuation is at around 5.5 times that of FY24 sales. 250 crores is the overall valuation. So keeping an eye out on Bikaji, we're expecting a bit of a green year. Couple of railway stocks. So RVNL, they've emerged as an L1 bidder for the Maharashtra Metro Rail Corporation. The value of this project is around 270 crores. So a positive move is what we're expecting here. Railtel Corp, also positive move. They've won a couple of orders, multiple orders worth around 90 crores from different projects. One is Krantirati Smart City project, which is of around 51 crores. Another one coming in from CGDA, which is of around 21 crores. And ICDS Commissioner has also given work orders in the state of Maharashtra for around 14 crores. So amounting to almost 90 crores is the project win for Railtel. Yesterday, we had already seen a run-up because they had won orders yesterday as well. So on the back of that, keep an eye out on Railtel. And lastly, PG Electroplast. The board will be meeting on 19th of October to consider some fundraising plan. So yes, on the back of that, some positive up move for PG Electroplast as well.
Okay, all right. Got that, Vinny. Thank you very much. So let's quickly recap our list of stocks to watch. The ones that have positive news flow are Mphasis, Crisil, Kolte Patil, GMR Airports, Bikaji Foods, RVNL, Railtel, and NALCO. Stocks with negative news flow around them this morning are Bajaj Auto and L&T Tech Services, both result reaction.